Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Investments Limited, and as I speak to all of you this Monday morning, last 4 days of downward move in the markets. This Monday morning was nothing new, but the good part is that the levels that we started off the day, there has been some amount of recovery. We managed to hold out 25,000 on the Nifty spot and then recover. Currently, as I speak to all of you all, we are trading at 25,100 plus kind of levels. This Monday morning at around about 10:50. The view remains a little bit cautious given the tepid beginning to the first quarter earnings. Of course, a little bit or a much too early in terms of taking a decisive call on the earnings front. Just TCS is out with the numbers. We'll have a lot of other companies following this week itself, some large cap companies like Reliance Industries on 18th of July. But the markets have not taken on a lighter note and has in fact reacted. Concerns are both from the local and global front. Global front, as we all know, Trump tariff tantrums and what will be the impact. And on the local front, more importantly, of course, the direction from the Q1 numbers is something that will guide the market. Last week, when we spoke to all of you all, we had given out a level on the lower side of 25,200 to 300 that has been decisively broken. So currently, as we are trading about 25,100, the sense is that if we are able to hold on to 25,000 on the Nifty spot, then we'll see a recovery towards 25,200, 300. And if we breach 25,000, then I think 24,900 to 24,800 could be visible on the markets. These are preliminary levels, mind you friends. If there is some tailwind positive on the earnings front, then I think the market will rejoice on that front and we'll see much more higher levels. Domestic institutions versus FIs. FIs were net sellers over the last couple of days. Last week, Friday also, they have sold. Domestic institutions were on the buy side and they continue to support the market in terms of lower level value buying. On the volatility front, India VIX 12.19. Mind you friends, this 12.19 on the India VIX has come in after a very long time. After a lot of months, we've seen levels of this with an uptick of about 3.21%. Of course, it was lower on Friday, but today it has inched up given the kind of weak start for the week this Monday morning. Expect levels of 25,000 to hold out. Stock specific tailwinds, earnings direction, and of course news flows from the global front will be the force that will be driving the market. Primarily, crude oil has inched up because of the US sanction news rather. News flows of US sanction on Russia, there has been an uptick in crude oil front. But our view is that crude oil is not going to last on the highest levels for a pretty long period of time. We will see some decisive downward move in terms of crude oil prices. $70 or thereabout is Brent, $67, $68 a barrel is NYMEX. I don't think there is much to worry about because eventually we will see lower levels with the global supply increasing and demand not so very strong. On the INR dollar front, well, 20 paise weakness this morning on the Indian rupee against the dollar. 86 is the level. Though we did see some strength last week, but then again, rupee has weakened against the dollar and 86 is the level. I expect some amount of downtake on the rupee dollar front, oil to ease off, earnings to give direction, and of course, global news flows will possibly be something that all markets will be watching out for. All global markets, developed, emerging markets, Indian markets. So, given the beginning of the first quarter earnings, and of course, every Monday we give you certain investment ideas, we believe there will be two sectors that needs to watch out for. Those two sectors primarily will be FMCG and cement. So in the FMCG pack, before I give any recommendation, I think it is prudent to give a disclosure that all the recommendations from a long-term point of view on the fundamental side are a part of our research team view. Our company Geojit or myself, we do not have any investment interest in the recommendations that are given out, nor there is any kind of financial benefit or any other kind of conflict of interest. But we give regular recommendations to our clients on similar lines. They might have their investment position from a long-term point of view. The first recommendation, as I said, I think we need to focus on domestic consumption-driven stories, and in that, with that kind of a point of view, there are sectors that will have a tailwind positive. Government policies, whatever is happening in terms of good monsoon, and of course the festive season, which is likely to kick off from next month. It will go up to October, November, December, and this festive season is likely to throw in positivity in terms of consumption demand. So we have two themes: consumption discretionary and non-discretionary. So on non-discretionary front, there is a company called Tata Consumer Products Limited. We've been maintaining, our team rather, fundamental team has been maintaining a very positive stance on Tata Consumer Products Limited for a pretty long period of time. Have some strong power brands in terms of Tata Sampann, have introduced organic products in this particular category, Tata Sampann, and along with that, of course, lower input cost, better profitability margins, lower crude oil prices, better demand from semi-urban rural India, supported with Tier 1, Tier 2 and metro cities. Expect earnings to improve. So first investment idea is Tata Consumer Products Limited. Mind you, start at current levels, and as and when you get dips, you can add on to it. The second investment idea or a second investment theme is again from the domestic pack on fallback of infrastructure creation, improvement in the real estate sector. Cement is something that is looking very, very strong, and we may have discussed this particular name earlier also, but given the positive outlook on cement consumption, lower prices in terms of input cost and higher prices in terms of cement bags, mid-cap idea is Dalmia Bharat. Has got decent presence pan India, has got very strong dealer distribution network, and of course operational efficiencies is likely to improve. Last financial year, mind you friends, Dalmia Bharat, there was a little bit of disappointment in second and third quarter, but we expect with the turnaround, cement bag price hike, lower input cost, and of course lower crude oil prices also beneficial to cement sector. Dalmia Bharat is the second investment theme from a long-term point of view. Start at current levels in both these stocks after understanding the risk reward, and then gradually on dips you can continue to add on to it. Thank you very much for your patience hearing. I'll see you again next week. Till then, please do take care of your health. Bye-bye.